Okay, hi guys, Richard Jackson here. I've got Daniel Vu on the other end of the line here. We're going to talk about gold and maybe a couple of other things like Euro USD maybe, and what my take is on what's going on in the market at this point in time as far as I guess fundamental analysis goes. Okay, because let's just start off with that, right? I've got a very big opinion that by 25 we'll probably be in a recession type mode. Okay, there are a lot of problems that are going along in the world at the moment. Ever since the oil pipeline that got hacked in the United States, which we obviously, it's very clear that that was Russia as well. There's all the restrictions now on oil. There's also restrictions on the export of wheat and fertilizer out of that southern or that eastern section of Ukraine because the Russians have got a hold on it all. So I did read in BBC World this morning that that Africa is now going to struggle quite a bit with importing wheat etc. from Ukraine, and that's going to be a problem for them, and it's going to be a problem for everybody. We've got rising costs of living, rising interest rates. A lot of small businesses like cafes and things like that are really going to struggle, and I wouldn't be surprised if we see them close up due to the fact that now in Australia especially we've got the minimum wage has gone up by over 5%, and all the rising costs that are going around. There's just not going to be, I don't think small business like that is really sustainable, so we'll see a few of them close up. On the flip side, we do have increasing interest rates, so some people maybe that have bought properties at low rates and they haven't really calculated that well, they might be find themselves getting into trouble. So property prices may plateau soon or just freeze due to that fact as well. Yeah. All right, so let's look at gold. Hey, all right, let's look at gold. So back over here on a daily chart, gold is that safe haven. At this point in time, we have had our moves, due to the news that has come out, but we're kind of like sitting in this holding now. Okay, so on this daily, I've drawn in this trend line up in here, and we've got a kind of a stop. We've got a ceiling over here, this double ceiling or double top type of scenario. This is not a double top, by the way. Okay, this is simply just resistance. It's not really worth more than $2,100 or $2,100 or that 2050 mark, right? It's more comfortable sitting around in this area. Let me just go up a little bit. This is quite an aggressive move. So this here is a top in here, so that needs to be taken into account. And we did find out another top in there. Okay, but all in all, I think, if we sit ourselves in this range in here, this is probably where it's the most comfortable. Do you agree, Daniel?
Yes, I do.
Yeah, okay. So, selling off these tops, buying off these bottoms. If we zoom in, this is a daily still, okay? So if we just hold, let me just get rid of this. This is a daily still. So if we really did want to, we could be doing this as well, okay? Looking at that. Let's move down into a 1 hour. Okay, you can see down here on the 1 hour that, let me just zoom out a little bit. Okay, that yes, this is kind of the floor in here, isn't it? Okay, that's kind of the floor. So around about that 1800 level is the floor. Nothing really more than 1880. Yeah. So
Yes.
buying into the top and then selling off the top and buying off the bottom is probably what we want to do at this point in time. Now, if we go down even further, we can see that we're moving into this triangle type of scenario, or flag, or pennant, whatever you want to call it. So we will want to see a breakout of that before we start doing anything. Yeah. Now, previously I did mention this the other day that this was a head and shoulders in here. Yep. if we do the measurement of our head and shoulders up in here, so we might see this breaks out and comes up into this 1864, and it's really nice that this 1618 is right at the top of the range as well. Okay, all right, so that we could see this as being a profit taking zone in here as well. Yeah. All right. Okay. So let me just clean that up a little bit. So yeah, I think the analysis at the moment, right? We have found our comfortable zone because of all of the news was last week. If we go over to economic calendar for this week, there's really not that much happening. Okay, we do have inflation on sterling. We do have inflation on CAD, but that's really it. Okay, there's no major US news that's coming out that's really going to, sparking interest. All of this gas and oil, that might be, if you're an oil trader, you would be wanting to have a look at this and see what's going on. This testimony, this has already been spoken about. It's just a testimony as well, where he gets pinged by all of the Senate holders, or all of the seats in the Senate, but it's not really an announcement. Okay. But yeah, this week's pretty low as far as news announcements go. So I would probably not expect too much to really be happening. I'd be looking for the breakout of this, out of this flag before anything. But let's make sure that we do our count. So 0, A, B, C, D, E, right? Before anything. Okay. So we've still got a little bit more to go in here. Okay. Does that make sense?
Yes, it does.
You got any questions about it?
Probably not at this stage, because the market, well, as you can see, it hasn't moved much,
No.
For me to form any opinion about it.
Correct.
I think we just need to wait for more volatility to see where the market wants to go.
Yeah, so I mean, looking at all of that low in there, if we just draw this all the way back, it's kind of there, here. So it's kind of in that really right in the middle, isn't it? Right. So yeah, I agree with you. We really got to look for a breakout. Watch out for a fake out though. But this is your top, this is your bottom, and we're right in the middle right now. So yeah, that's the opinion on gold. Yeah.
Yeah.
All right.
I mean, like gold, it's not that as complicated. I mean, honestly, if you just follow the 50, 100, and 200 like moving averages as you have on the chart, and you just buy support and sell resistance, and you actually allow the position to run towards, like the profit, you always are going to end up profitable anyway.
Correct. That's right.
Yeah.
That's right. All right, let's have a look at euro. Let's see what's going on here. I was talking about this earlier today with somebody else. Now, we're down at 104. This is our bottom. Okay, 104 is right at the bottom. We've got a double bottom in here as well. Be careful of the double bottom because we've got such high momentum to the downside. All right. But obviously this is a daily, so let's draw in here our double bottom rule. Okay, so our next stopping point, will probably be up into here, 110. Then we've got 111 or 112, and then all the way up here. Doubt it's going to come all the way up here because we've got such high momentum to the downside. So what we want to do is we want to grab our Fibonacci and see here, right on that level there is our 382. There's a 236. Okay, so let's just be careful about where our Fibonacci levels are. Just thinking about it, I might actually take that to there. Okay, because that looks more comfortable to me. All right, because these are all lining up. So this is your next, point of resistance up in here. If that does break this neckline though, mate, it's high momentum. This thing's just going to go sideways. Maybe even have like a last push, last hurrah to the downside before it moves back to the upside. Not sure. Let's see what happens though. Okay, so back into let's go back here. Let's draw in this low in here because these lows, So there's high resistance up in here. Yep. Okay, because that was all support. Now it's turned into resistance. That's why it stopped. Okay. Going right down into a half-hour chart. It's the same sort of pattern that we're now getting on gold. Okay, so obviously it's all relative. It's all related. Yep. So I'll be very, very, very careful about this just bouncing around. We really want to see this, break out nicely before we start taking any trades. Now, some of you who did take this as a long, right? It's not bad, but again, I'm just wary of this such high volatility to the downside that this is where it's comfortable in this 105, 104 zone before we start moving back to the upside. Yep. All right. I guess that's that. What else?
Yeah. There's not much to go on at the moment.
There's not much to go on it. Yeah. I agree. Okay, so just be careful this week because there's just no news announcements for us to grab a hold of. Look for your little AB equals CDs.
Yes.
Just be careful of momentum or doing the trap here. Because this is high momentum to the downside. Anybody who took this as a double bottom might have fallen into the trap. Let me just take this back, right? Might have fallen into the trap that, this might come back right back up here into the 50. It eventually did, but it really wanted to do the last hurrah in here, okay? We needed to get rid of all of this volume in here before we start taking, our longs. Doing it on the first one usually is, low probability because we've still got all of this momentum sitting in here on the wider time frames. So be careful of reversal patterns or taking a reversal pattern when you've got high momentum, high delta, MA delta. All right?
Yes.
Okay.
And I want to comment on what you just said, like a minute ago about taking the small ABCD, because from what I have observed is that, like all the small ABCD, say from 5 minutes or the 15-minute chart, they actually work out much better than the one on 4 hour because I think, like by the time you wait for the 4 hour ABCD to work out, the market has forgotten about it already.
Correct. It's called Lupinoff's time, right? So it's part of the topological mixing of a random process or a non-deterministic process, right? So Lupinoff's time, the longer you leave something, right, the more information can come in and change the opinion of the market, right? So this is why I prefer to take the smaller guys. So let's, for instance, okay, this is what I prefer to take. We've got high momentum to the downside. We've got to retrace to the 100 period plus this 236, and then here's your 50% rule. Okay, A, B, C, enter, D, in and out within a handful of hours. Okay, if we're starting to think let's take these really big ones, too much time it takes too long to get to your target, right? So let's concentrate on the little guys, right?
Yes.
Right, even though, so we've got a floor here, 1, 2, 3, and then we take this A, B, C, D. Yep.
Yeah.
Okay. The little guys. So anyway, that's what that's kind of what I'm really looking for, right? Go with the trend, if we've got high momentum, or wait for the floor and the reversal or the continuation. Here's a continuation to downside. Wait for your floor and then take your ABCDs off that. Does that make sense?
Yes.
Okay. So this is why now on gold, because this is where our changing of thinking, right? We now know that this is a floor and that's a ceiling. So we take our ABCDs off each of them. Yep.
Yes.
Yep. All right. This is all starting to become spaghetti on the inside here, so let's just leave it alone for now.
Yes.
Yep. Yep. All right, mate. I think that's enough for everybody. It's 15 minutes. All right, buddy. All right. I'll speak to you later.
Okay, thank you, Richard. Bye
See-
bye. Have a good day.
Bye bye.